All right, today we're diving into a company that is, without a doubt, a quiet giant of the American economy, ADP. They're a leader in what's called human capital management, which is really just a fancy way of saying they handle the critical, complex, and let's be honest, often tedious work of payroll and HR for countless businesses. To really grasp ADP's scale, you just need this one stat. The company processes paychecks for 1 out of every 6 workers in the United States. That's an absolutely incredible footprint. It means they're deeply woven into the daily operations of over a million businesses. But here's the multi-million-dollar question for any investor, right? Just because a company is a giant, does that automatically make it a great stock to own for the long haul? Well, that's exactly what we're here to figure out. So here's how we're going to break it down. First, we'll look at what makes ADP so powerful, what we call its economic moat. Then we're going to check out the new challengers trying to tear down its walls. We'll also dig into the company's track record of making smart moves, and finally, pull it all together for the final verdict. Okay, first up, let's explore the bull case for ADP. What exactly makes investors so confident in this company? Well, it really all comes down to its powerful, and some would argue almost unbreakable competitive advantage. So, what in the world is an economic moat? Honestly, think of it like a castle's defenses. It's a structural advantage that protects a company from competitors, letting it rake in profits over the long run. And for ADP, this moat is seriously wide and deep. And the proof, as they say, is in the numbers. This number right here, this is pure loyalty. It's ADP's client revenue retention rate. Over 92% of their revenue from existing clients sticks around year after year. That tells you that once a company is in the ADP ecosystem, they almost never leave. And why is that? Because switching is an absolute nightmare. Now, this tells you a lot about the quality of the business itself. ADP generates a roughly 50% return on invested capital. That is an exceptional figure. It shows that management is incredibly efficient at turning the money it invests back into the business into actual profit. It's the hallmark of a really, really great operation. And hey, this isn't some recent hot streak. Under their former CEO, Josh Weston, ADP achieved something legendary: 164 straight quarters of double-digit growth. We're talking over 40 years of consistent, predictable performance. That kind of history builds an incredible amount of trust. So where do these incredible numbers come from? It's really these 4 pillars. First, you've got those high switching costs. I mean, ripping ADP out of your company is a painful, risky process. Second, their brand is basically synonymous with trust, and you just don't mess around when it comes to payroll. Third, their expertise in compliance is almost impossible for anyone else to replicate. And finally, their sheer scale gives them a data advantage that no one else can even touch. Okay, so that is a powerful bull case. But as we know, no fortress is truly invincible. So now let's flip the coin and look at the counterargument. What are the threats that could actually challenge this payroll giant? The main threat really comes from a new generation of cloud-native competitors. See, while ADP's strength is its rock-solid reliability and scale, these new rivals are all about user experience and being nimble. They compete with modern tech, often at a lower price, and they're chipping away at the market with a pure software-as-a-service model. So the risks come from a few different directions. On the outside, a recession could mean lower employment and fewer paychecks to process. Volatile interest rates can mess with the income ADP earns on the funds it holds for clients. And of course, there's the constant pricing pressure from competitors and that long-term risk that AI could eventually make it easier for companies to just handle payroll themselves. So we've got a strong moat on one side and some very real threats on the other. What's the tiebreaker? Well, for a lot of long-term investors, it all comes down to the quality of the management team and their ability to navigate these kinds of challenges. So let's take a look at their track record. This timeline really shows that ADP's leadership has a history of making smart, decisive moves. They've spun off businesses that weren't part of their core mission. They've responded effectively to pressure from activists by becoming more efficient, and they've made strategic acquisitions to beef up their main offerings. This is definitely not a management team that just sits on its hands. If you were to give them a scorecard, they'd get high marks pretty much across the board. Their operational execution is strong. We saw that with the high retention rate. Their financial management is conservative and disciplined, and, maybe most importantly, they've proven they can adapt, evolving the company from the old era of mainframes to the cloud and now to AI. And here's the proof in the pudding when it comes to their commitment to shareholders. Since 2010, they've grown their dividend at a compound annual rate of over 10%. That's not just a promise, it's a consistent, tangible return of capital to investors year in and year out. All right, we've seen the strength of the moat, the reality of the threats, and the quality of the leadership. So it's time to put it all together and reach our final verdict. So here's the investor's dilemma in a nutshell. The bull case is crystal clear. A wide moat, an essential service, strong cash flow, and great management. But the bear case is just as clear. You've got nimble competition, exposure to the economy's ups and downs, the risk of tech disruption, and the fact that the stock already trades at a premium price. So the crucial point really is this. ADP is, without a doubt, a great business. The question for an investor is twofold. What price are you willing to pay for that quality, and how confident are you that its moat is going to hold up against all these new challenges? And that leaves us with this final thought. For a company like ADP, the debate isn't really about if it's a high-quality business. The decades of evidence are pretty clear on that. The real question for any investor is one of timing and valuation. When does a great company also become a great investment? And that's the key takeaway.